China just sent a massive warning to Nvidia and its acquisition of Mellanox that happened in 2020. But should Nvidia stock investors be worried? I'll take a closer look at that and some other stuff impacting the AI and semiconductor news today. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Nvidia at the beginning of the day did see some negative movements, and mainly because of this China news. So let's try to understand a little bit of what happened. So in 2020, Nvidia made an acquisition of Mellanox. To be able for this acquisition to go through, the Chinese antitrust regulators approved it as long as certain conditions were met during the acquisition and throughout the acquisition. Now, on September 15th of 2025, China's antitrust regulator announced that a preliminary investigation found that Nvidia had violated the China's anti-monopoly law. Now, unfortunately, we don't know exactly what was broken or what law was broken. They did not share that information. They're just saying preliminary investigations found that it had violated, and they're going to continue with the investigations to find more and more. Now, to maybe try to understand a little bit of what was happening here, let's try to recap what were the required conditions that China gave Nvidia in 2020. First, no bundling. Prohibited tying or bundling Nvidia GPUs with Mellanox networking products, where the only way you can buy Mellanox products was through buying Nvidia GPUs. You couldn't make it where it was to get one, you had to buy the other. Nvidia already bundles, but you still had to have the opportunity to sell them individually, which Nvidia does. Then there was the FRAND supply. It must supply products to Chinese customers on fair, reasonable, and non-discriminatory terms. One of these terms was to be able to provide products to Chinese customers for X amount of years before shutting it down. They couldn't just shut off right off the bat. And I think this is where some of the big questions and the regulations were broken. And I'm going to say it has not much to, it's not necessarily NVIDIA's fault. The other thing is ensuring that NVIDIA GPUs remain compatible with third-party networking, and Mellanox gear works with rival accelerators. So you had to make sure that every type of product that NVIDIA or Mellanox had could work with other competitors. And that's the case, right? We still see that. NVIDIA GPUs can be used with other types of networking solutions, your traditional Ethernet standards, everything else. And obviously, there's their own standards that NVIDIA has. But NVIDIA, both for the GPUs and the networking, you have both NVIDIA solutions, but they work with any form of third-party networking solution or rival accelerators. Now, the supply guarantee. This kind of goes back with the FRAND supply. Gives Chinese buyers the option to purchase and stockpile up to 1 year's worth of inventory on FRAND terms, and no discrimination. Prohibited discriminatory treatments of customers who chose to buy products separately. And these conditions are set to remain in force for 6 years. Through April 16th of 2026, unless lifted by the Chinese regulators. Now, post-2020 context, a lot of things happened. The first thing, in October 23, United States blocked sales of the A800, the H800, and other advanced NVIDIA chips to China, with some restrictions taking effect immediately. Now, China's regulators had a firm stance. They had previously cautioned that companies cannot invoke U.S. laws to excuse non-compliance with merger commitments in China. And this frames the entire dispute. So you couldn't say the excuse of U.S. laws to excuse any of the conditions previously met. And I think that's what's happening here, right? NVIDIA had to cancel certain products that they couldn't ship to China. And China is now saying, look, I don't care what other companies or other countries told you can't do. You had to do it regardless. That was part of the commitment. And I think this is where a lot of the FRAND and stockpiling is most likely the friction. Again, we don't have the actual answer of what's happening. Now, the bottom line right now, we just have the preliminary view that NVIDIA did violate the China's anti-monopoly law in 2020. And with the approval conditions, now we just have to see what is going to go on from here. Now, I wanted to show NVIDIA's China's revenue. In the last 12 months, China's revenue was roughly $19.2 billion. if China finds, they're gonna find Nvidia based on the revenue that goes to China, and they can actually do a nice percent, about 10% of revenue to that market, which could be about a $2 billion fine. Now, why is China doing this? I don't think they want to get in Nvidia's bad side, and they know that Nvidia isn't the one at fault. But right now, there are a few things happening. Chinese trade negotiators and US are having some talks right now, and they're trying to make sure to have a lot of trade leverage in the table. We hear talks about TikTok. We see talks about AI chips, obviously networking. We even see China recently launched some other stuff. So what's happening right now, in my opinion, has to do a lot with just the trade regulations and the trade wars. Every company, every country wants to have something at the table, and they want to show to the United States, hey, listen, if you guys play bad with us, we're going to hurt your companies as well. And that's going to end up hurting you. So that's the first thing. I think all this has to do with the trade deal. I mean, most recently on Friday, the United States added 32 entities, 23 of them in China, to a Commerce Department restricted trade list. They included 2 Chinese firms accused of acquiring U.S. chip making equipment for China's top chip maker, Semiconductor Manufacturing Corporation in China. Now, kind of to counter that, it did seem like China did what it did for Nvidia, but China has also launched an anti-dumping investigation into analog integrated circuits. That's why we see companies like Texas Instrument down today, right? We saw Texas Instrument down 2.4%. And for those that are not familiar with anti-dumping, is exactly what it means, what it sounds like. They're accusing analog companies to be dumping a lot of inventory in China at a much lower price than its competitors, creating this huge negative impact to the economy for that sector. But you are seeing that this is more than just Nvidia. This is a whole kind of ecosystem, and it's more of just the countries having their disputes and taking it out on other or on the countries of the companies of that selected country. So that's what's going on here with China. For me, as an Nvidia stock investor, I'm not necessarily bearish on this news. I do believe China needs Nvidia not only for their AI accelerators, and also they also need them for their networking chips. But we do know that Nvidia has become kind of like one of the biggest trade trump card for Trump and his administration. So they have to attack hard, and they're attacking on Nvidia. Again, long term, I don't think this is anything Nvidia stock investors should worry, as their technology is very much needed for China to continue to develop their own AI chips. Now, there are a few other news I want to take a closer look at. Nebius is down, it's actually up, it's pretty much flat after hours, but was up about 0.6% earlier today. I believe after the market closed, they announced that Nebius Group announces the closing of its public offering of Class A ordinary shares and the convertible senior notes. They raised roughly $4.2 billion. This is a lot more than others were expecting. On the lower end, it was closer to $3 billion, but $4.2 billion. And again, most of this is going to be used to build and expand their AI infrastructure. This is pretty great. About $3.2 billion was new debt. The other $1 billion came in from the dilution of shares with the offerings of Class A ordinary shares. So interesting there. Now we're going here with CoreWeave. CoreWeave was up roughly 7.6% on the day, sitting at $120. The main reason is CoreWeave did sign a deal with Nvidia that Nvidia is going to buy any unused AI capacity if CoreWeave loses some demand. There are speculations with it. I kind of talk about it in a previous episode, so check it out. But here we do see that CoreWeave did kind of create more of like a floor for its AI compute with Nvidia, which CoreWeave investors are super excited about. Now, the final thing I want to take a closer look at, and one I'm super excited, is Meta. Meta was up about 1.1% today. We did see some videos coming in on X. Let's see if we can Meta glasses. But later this week, it is reported that Meta is going to release some new cool glasses with AI solutions. And I'm pretty excited about that. I really am. If they are pretty... okay, here we go. So let's take a closer look at the video. An ad of Meta's upcoming Smart glasses and sleek. The video shows a Ray-Ban display making use of Meta's AI assistant, navigation and translation with transparent overlay, and writing out a message with only a gesture of wristband. So pretty exciting here. I see you can kind of see this. We're going to hear more about this later this week. I am super excited, as I do believe this is going to start off the AI market for the consumer space. So a lot of great news here for the AI market. Take care, have a good day, and see you all next time.